What's up, everybody? In this video, I want to talk about what's, in my opinion, the most effective way to grow a small account, or honestly, even any account size, whether you have a larger one or a smaller one, and it involves really minimal risk. I'm also going to go over the technical analysis behind each setup, along with its context, and I'm going to show you if you were to take each trade, the potential behind the setups, how to trade around them, and if you were to trade its underlying options. Now, all of these things we're going to go over were posted in the Discord. The point of this video is to not boast about performance and say in hindsight you could have done this. Instead, to show you the power of trading this way in order to grow your account and minimize distractions and not really deplete your mental capital in doing so, which is very important in my opinion. Before we do begin, all I ask is if you want a very good trading resource, be sure to follow my Instagram. I will link this in the description below. I post daily trading recaps along with very good trading tips and tricks. Link is in the description below. You're definitely missing out if you aren't following it. Now, without further ado, let's get right into this video. If you're struggling to find consistency and you really want to grow your account, what you have to do is limit the noise and avoid all distractions in your trading. I see it all the time. Many traders look for 100 different setups and they don't realize the best one is literally right in front of them. So what I recommend doing, especially in this market, is focusing on the S&P 500 or the Nasdaq. They're the most liquid markets. They trade very fluently. They provide clean setups almost every day with supply and demand. And when there's not a setup, it's very evident, and that's your red flag to walk away and or even be a spectator. Now, I chart the E-mini/ES. It's the future. Whether you trade the future itself or you trade SPY options, which I prefer and I recommend because these move in large percent gainers. I trade the SPY options without ever looking at the SPY chart. In fact, I just follow along the S&P 500 chart. To get more context of the first trade, let's go over the pre-market plan. Again, this is not to boast about how well the plan worked out. This is just to get context and show you the levels that we were watching, all based off of technical analysis. So what we were watching today was sellers that were priced in at 4104 to 4124, that any rally should get cut off there. We're going to be watching for puts at that supply imbalance. The next area, if we sell off, is gauging how well buyers defend the 4072 demand zone. It was a very strong area responsible for a very large rally. So the market opened up, and again, I'm looking at the E-mini chart. If you divide this by 100, for example, if the S&P is at 4070, then SPY is going to be at 407. If the S&P is at 4100, SPY is going to be around 410. So the market opened up. We were consistently making lower lows, consistently making lower highs, and we came into this demand zone. But I really, due to the context and how the market was reacting to volatility and reacting to volume, I did not see clear confirmation to get the market long down here. Yes, it bounced off of demand, but I'm really not going to include this in the example. And we did get a beautiful move up from this imbalance for those that did take it long. Then the market moved up. This was not something I was watching. However, we came above the high. It acted as support, and we held VWAP and then started moving up. So this technically could have been your first valid long trade if you did not get long at this demand zone. But what's key here from the pre-market plan was the 4104 supply zone that we came up and we started rejecting it. So this gave multiple different areas to place SPY puts. At this time, SPY was around, or ES was around 4100, 4105. So you would have been safe playing, the 4100 puts, even the 410 puts, or the 409 puts. So if we go to the option chain, you'd be able to pick out the option you're looking to trade. And the idea here is we are at a supply or sell imbalance, and we have sellers active at this area. We need to gauge the price's reaction off of this, and then we could look to play on the same side if sellers are responsive to price and they bring it down, where we could look to scale depending on our exit strategy or where we look to take profits. What we're going to do now is import the SPY 409 puts. And again, the beauty behind this for smaller accounts, if you are scalping, same day expiration, 1 days to expiration is totally acceptable. SPY and QQQ options expire every Monday, every Wednesday, and every Friday, and we all know what happens closer to expiration if we time the market properly and we play on the same side. On the left, I've loaded up the SPY 409 puts, and on the right, we have the same S&P 500 chart when we hit supply. And again, for those that are new, we need to wait for price to respond, and we need valid confirmation in order for us to take a trade at a supply or demand imbalance. Just because we're at a zone doesn't mean we have to take the trade. These aren't magic. These are just areas we need to gauge participation. So at the time, the S&P was at the 4104 supply. SPY was around, let's just call it 50 cents, 55 cents. And in a quick 10-minute period, these went to a high of around 97 cents. We have to play it a little conservatively because no one is ever going to buy at the bottom and sell at the top. We have to understand that. So these went from 50 cents to 97 cents, a 94% return in about 10 minutes. So if you used $500 to put this trade on, your account or the profit you would have made from that was around $470 from low to high. Now, even if we get a piece of that, 30-40%, that is still a quick gain in a matter of 10 minutes. Now, the market presented another good opportunity. When we hit supply again, we failed to stay above the high, yet because we were trading same day expiration and we did not have time in our favor, these contracts at the same time we're at supply were a little cheaper at this point, even though they're at the same price than they were, an hour ago. So now these are worth about 30 cents, 35 cents to play it a little conservatively. Again, we're not going to get the bottom of the market. And these sold off back into VWAP just like it did. So from 35 cents to a high of around $1.70, that is a 385% return. A $500 trade would have made you a $1,900 profit from $500. Again, you're not going to get the full move. Let's play it conservatively. From 30 cents, let's just call it, to maybe a portion of that once we got that quick push down according to my take profit strategy. So from 30 cents to around $1.50, that's still a 200% return. And if you were to look at these contracts, it really did not give us any reason to sell. The best trades for me work out right away. And when it starts moving in my favor fast and right after I enter, I know that trade is going to work out very well for me. Now going over Nasdaq/NQ or QQQ. From the pre-market plan, we had demand at 132.54 that we were watching, demand lower and supply above. So I did take this trade. I'm going to break it down where I got in and where I got out. So on the right here, we have the future. And on the left right here, I'm going to import the 324 QQQ call, the options, right? So the market sold off into this demand zone. And this is where, you're never going to get in right away. But going back to my previous example, the best trades for me, what I've just been noticing in the current environment, work out right away. So as soon as we started seeing buying volume coming through here, as soon as we started seeing these thick 1-minute bodied candles to the upside, I took these QQQ, the 324 calls long, at 94 cents right down here. Now, one thing to note is, I didn't catch the bottom at 70 cents. I waited for the market to confirm it, and I got long at 94. My exit was not at the top over here. It wasn't at the top over here. I took profits at $1.26, which is, right here. It was a quick 1, 2, 3. It was a 4-minute trade, and these contracts went from 93 to $1.26. Ballpark it around 30 or so percent. So if you're trading 100 contracts, this costs you $9,000. You're gonna make around $3,000 profit off of the trade. You're trading $900, let's just say, right? 900 is a decent amount. You're gonna make $300 profit in a matter of 4 minutes off of this quick and simple analysis that worked right away. And the market did not even move in our favor. If you were to sell at the top, these went from 90 cents to $1.60. That's 77% return. Then a little time in the future, the market came down and we double bottomed at this demand. Now, like I mentioned earlier as well, when I exit, I don't always look back and say, oh, I could have made, $5,000 more, or oh, I could have made $500 more, right? I made my profit. I followed my plan. I followed my strategy and I executed. I had to do what I had to do, and I'm not going to look back and complain about missed profits. It worked. I made money on it. Now what you have to do is focus on the next best opportunity, because that could be even better than the previous one. So we did double bottom off of this demand zone. We did rally briefly, but due to the context, this eventually did, if you didn't take profit, sold off a little lower into this demand zone. And by end of day, we moved up and, out of it. Now going back to SPY, this is a good lesson. It's very important to not trade with a bias. Now going back to my plan, I originally had intentions, if we were above 4180 today, we were going to rally into supply around 4200. So I had a very bullish bias. I really did not adapt to what the market was telling me. It's something I stress out a lot. And I really didn't pay attention to the supply zone at 4184. It's a textbook setup. It's A plus, 10 out of 10. I personally did not take this. I didn't even see it until after the fact, and a member actually messaged this to me and made very good profit off of it. But we did sell off from this zone. Kind of hit myself in the head for this. Missed opportunity, but it happens. Got to brush it off. These contracts were around 38 or so cents. They went to around 80 cents, 90 cents. And by end of day, these went to about $1.90. So very fast, quick mover off of this supply. You could see what happens to these contracts. It's very interesting. You know how it moves. You all understand a little bit better how I prefer to trade and what I recommend for those that have smaller accounts to do to grow their account and to eliminate a lot of noise and distractions. One thing I would say though before I end this video is 0 days to expiration have more risk because the premiums could go to zero. They could expire worthless. So understand that. No one's going to get the low down here. No one's going to sell the high. But if you're buying at demand or you're selling at supply and you wait for proper confirmation, your risk is very small. If we were shorting the supply, let's just say we get an entry at 43 cents. Most likely our stop's at 36 cents. So we're risking 7 cents here. As long as our reward is above 20 cents, 21 cents, we could take 10 trades. 7 of them could be losing trades. Yet those 3 winners, if we have a 3-to-1 risk to reward, can still make us profitable as a trader. A lot of people don't understand that. They can't accept the fact of that reasoning, and they take a losing trade, they put their head down, and they forget about the next best opportunity. So I always am one to stress for Invest the Trade members. You only need 1 or 2, even 3 good trades a week, and it could really make your month. It's all it takes. Focus on quality. Focus on the best setups. We're not hitting home runs. Just focus on the consistency. Take a quick 20, 30, let your contracts ride. These contracts are very liquid, they move fast, and it's very powerful at supplier demand imbalances. So I'm going to end the video here. Thanks for tagging along. Comment if you have any questions. Please drop a like on this video, and be sure to check out the links in the bio. If you really want to learn more, I recommend checking out the course. Besides that, peace out.